Hey everyone, welcome back to the channel. So here's what's happening. We absolutely nailed our first prediction, and guess what? The second pump just happened today. If you caught our video yesterday, you know we called this pump number 2. But here's the exciting part. I'm seeing strong signals for a third pump incoming, and we've got some incredible white swan events happening right now that are backing this up. Let me break down exactly how we're predicting these moves so accurately. First up, some massive news from Bitcoin Magazine. BlackRock's Bitcoin exchange-traded product is now officially trading on the London Stock Exchange. This is huge, guys. We're talking about serious institutional liquidity flowing into Bitcoin, and I believe this is one of the key drivers behind today's incredible move. Bitcoin just hit 114,000 today. Can you believe that? And here's what most people aren't realizing. There's a real possibility we could see Bitcoin push toward 124,000 or even 125,000, which would take us back to those previous all-time highs. We're going to keep seeing these white swan events, especially if the USDC dominance chart confirms what I'm thinking. That's exactly what we're going to connect the dots on in today's video. Plus, there are even more white swan events from the Fed meeting we need to discuss. So here's our game plan. Let me walk you through our track record. We called the first pump perfectly. Check. The second pump happened right on schedule today. Double check. Now, the big question is, are we heading for round 3? I personally believe we are, and here's why. Look at XRP. It's seriously lagging behind Bitcoin right now. When you check the XRP versus Bitcoin pair, you'll see it's trending downward. Here's the thing about XRP. It's almost always the last mover in these cycles. So when we finally see XRP pump, that's usually our signal that the market might be ready to cool off.
But for now, we're still in the game. Yes, we might see some short-term selling pressure, but honestly, that doesn't worry me because I think Bitcoin is going to keep pushing higher. This chart pattern should hopefully continue playing out in our favor. Remember everyone, we are still within the storm. We're riding this wave until we drop below that 5-day moving average on this pairing. Now, let me show you something we haven't looked at recently. This is the chart that really guides our decisions. See how Bitcoin tried to hold support multiple times in this region? It failed initially and broke through, but now it's coming back into that same range and trying to break out. I think once we break out of this region, it's absolutely go time. But there's significant resistance here, so Bitcoin is really battling it out right now. That's why we're seeing some of this selling pressure. We need to get above that 113,000 level to really confirm the next leg up. Now, let's talk about XRP. This is fascinating. For XRP, there's this one critical level at $2.50. This level is holding it down like never before. This is exactly what we called in our previous video when we analyzed this chart. That $2.50 level for XRP is the real troublemaker here. But here's the exciting part. As soon as we break above $2.50 and hold that level as support, guess what's next? The next target is $3. You can see how this works. It's level by level, step by step. Each breakthrough opens up the next target. And that's exactly how we've been calling these moves so accurately. That's the power of technical analysis combined with fundamental catalysts like the BlackRock news. Here's my advice. Take it day by day, step by step. Don't rush into anything crazy here. That $2.50 level is absolutely the key level to watch for XRP, and I do believe it will break out eventually. Think about it. XRP is seriously lagging behind Bitcoin right now. Bitcoin pumped all the way up to those highs, while XRP is still down here playing catch-up.
It's going to catch up in due time. I'm just not sure exactly when that'll happen. But patience is key here. Now, let me show you something absolutely wild. This insider just broke 100% gains and made $10 million in profits in about 45 minutes. This person is definitely an insider. There's no way around it. People are even speculating that Baron Trump might be behind some of these trades, going long and short on the markets and making insane profits. He supposedly hasn't lost a single trade. Now, I don't think it's actually him, but here's what matters. This insider, as we mentioned in our previous video, is staying long. And I think they're going to stay long until we hit the absolute top. So maybe we should do the same. What I'm saying is stay bullish. Don't try to trade this choppy action. I'm remaining bullish until this insider isn't. It's as simple as 1, 2, 3. Speaking of bullish, check out what Michael Saylor just predicted. He thinks Bitcoin will go up 30% per year for the next 20 years. According to his math, $10,000 invested today could equal $1.9 million by 2045. This is exactly what we need to hear from the Bitcoin maximalist himself. Michael Saylor is basically the ultimate Bitcoin advocate, constantly pushing crypto as high as possible. Now, do I think this will actually happen? Honestly, probably not. I do believe Bitcoin will eventually face challenges. But until that day comes, let's ride this wave higher.
Well, we started and we had very little and Bitcoin was 10,000 and now Bitcoin's more than 100,000 and 97% of the Bitcoin is worth 10 times as much and somebody else, not us, has it. Right. So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I just mean, if you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it. We want everybody else to have their piece. The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like Metaplanet in Japan and Capital B in France and Smarter Web in the UK. And then there's a raft of them in the US, Anthony Pompliano's company, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
That prediction is pretty insane if it does happen. But here's the reality. All we really need is bullish news coming out to keep this pump going. That's what drives these markets in the short term. And honestly, it doesn't matter what's real or fake anymore, at least not in the short term. Why? Because the entire global economy is built like a house of cards right now. What matters is simple. Does price go higher or not? Hopefully it does. And we got some incredible white swan events today that support this. Watcher Guru just reported that the Federal Reserve is looking into payment accounts that would grant crypto and fintech companies direct access to Fed payment rails. This is absolutely crazy news. I'm guessing this announcement is exactly what pumped Bitcoin to 114,000 today, which, by the way, we actually called yesterday because our spidey senses were tingling. Let me break down what this Fed news actually means. Eleanor Terrett reported some massive news from the Federal Reserve Payments Innovation Conference. Governor Chris Waller announced that the central bank is proposing a new type of limited access master account. They're calling it a skinny master account. Here's the big deal. Every legally eligible institution could get direct access to the Fed's payment rails without having to rely on partner banks. They wouldn't get all the services of a full master account, like borrowing from the Fed, but this is still huge. What does this mean for crypto? This new Master Account Lite would allow the Fed to give the green light to innovative banks, fintech companies, stablecoin issuers, and other payment companies. And this reminds me of Ripple once again. They're specifically mentioning fintech companies, and Ripple is a fintech company. They're talking about innovative banks and stablecoin issuers as well. This is absolutely huge for companies like Custodia Bank and Kraken, which have spent years trying to get Fed master accounts. Custodia even took the Fed to court over this. This could also speed up access for companies like Ripple and Anchorage, which applied this year. That's pretty insane, right? Now you might be wondering, why wasn't anyone from Ripple at this conference? Well, supposedly their chief legal officer, Stuart Alderoty, was there. But here's the thing. They've already been working behind the scenes with the Fed for a long time now. So does it even matter if they were publicly visible? Here's my prediction. I think some major XRP news is coming that's going to pump it hard. We are literally at the finish line. Everything we've waited years for is right at our doorstep. Look at what they're saying in this same meeting. It's all about payments. This entire conference and meeting is focused on payments. And what targets payments to the highest degree? It's XRP.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that have come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world.
Do you guys understand how XRP will play a pivotal role in the new financial system? It's simple as 1, 2, 3.
Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption. Don't avoid it.
They're telling us to embrace the disruption going forward. We told you, accept reality or get cannibalized. You either adapt or you get left behind.
As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution.
This is a revolution in payments. Now, I know they never said XRP directly, and I don't even have to watch it to know that, because they'll never say it in plain sight. But indirectly, they're pointing right at it. What's revolutionizing payments for traditional finance? It's literally XRP.
A number of technological advances are transforming the payment system. Stablecoins and tokenized assets, making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need.
You know what I find weird about this conference? They shouldn't even need to do it because there's no point. What's the real purpose of this meeting? To tell the public they're going to change systems, but they're not going to willingly accept a new system. It's going to happen through force, probably during some kind of crisis. So this is all just a show, in my honest opinion.
The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we're discussing today, the Fed was running trains on steel rails.
Think about it. Right now, it takes days and days to transfer money across the globe. Plus, it's expensive and inefficient. All of that needs to be updated. And it always comes back to one thing: XRP.
to deliver and clear paper checks traveling across the country. Fedwire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system.
We know it's going to be updated and upgraded in due time. All we need to do is wait. They're going to flip the switch soon. And tomorrow, there's another meeting. There's going to be a flurry of crypto activity on the Hill, including 2 industry roundtables. There are just so many external events happening for the cryptocurrency industry right now. And I think it's because we're about to pump hard. You guys realize this, right? All this positive news wouldn't be coming out if we were about to dump. Simple as 1, 2, 3. We're going higher, prepare yourselves. We called it again, and the signs are everywhere. The institutional adoption, the regulatory clarity, the payment system overhaul. It's all pointing in one direction. What do you think? Are you seeing the same bullish signals I'm seeing? Drop your thoughts in the comments below, and don't forget to hit that like button if this analysis is helping you navigate these markets.